Hi guys, today I want to make a small video for you about a chart pattern, VCP or Volatility Contraction pattern. I learned that pattern in the books or from the books of Mark Minervini, and yeah, it's a really simple to spot chart pattern. And I prepared here an example, a very recent example from the stock TELADOC. And I'm currently here in the weekly chart in Trading View. And you can see here the base itself. And you can see that inside the base there are some higher lows. I will draw that in here, and this is exactly the volatility contraction. So if I draw in a breakout line, you can see that the higher lows also represent a pressure to the upside. So every low, every new attempt to make a new low is bought by institutions, or you can also say, okay, there is a support from larger traders or from institutions, and they are willing to buy new lows here of the stock, and that leads to this pattern, this volatility contraction pattern. I will switch into the daily chart to show you the same pattern on the daily chart. Here you can see the same consolidation on the daily chart, and I will draw in the breakout line again. And then I will also draw in these higher lows here. The important thing, or the important point of a volatility contraction pattern, is that every downswing is, or every correction inside the pattern is less than the previous correction. So here you can see the first correction, and the first correction was around 44%. Then you see the second correction here. The second correction is about 31%. Then you can see that one here. This is 24%. And then the last one. And the last one is only around 20% or 18%. So every correction inside the base is on a higher low. And every correction inside the base has a smaller percentage of correction. That shows that the pressure from the support levels to the upside, so the pressure on this breakout level here, is increasing over time. And you can also see that the moving average EMA 65 is also here flat, and then the slope is upward, which is also a very good sign. And I will also, I want to point to the volume itself. You can see two things here in the volume. The first one is there are a lot of spikes, and the spikes, you can look at every spike and see if it's on an up day or a down day, and then you can see if it's accumulation or distribution. But if you look on the overall picture, you can see that the volume itself is decreasing over time. And that's a very good sign, especially in a base, because the selling pressure is getting lower and lower. And if you also see big volume bars on up days, this shows you that there is a high demand for the stock. And one thing I want to point out here is this dry up here. You know, there is a dry up in the last, in the last handle or correction, or in the last part of this volatility contraction pattern, and this is a very, very good sign, because if you see a dry up in volume, that always means that the selling pressure is very low, especially here now when the stock is going sideways. And if you see that the volume then is increasing on higher prices, then you see, okay, now the buyers are back in control, and you can see that the price breaks out here out of the pattern and then starts its up move. Okay, this is a very short explanation, and this is just one example of a volatility contraction pattern. Maybe some words about chart patterns in general. There is a misconception out there about chart patterns. A lot of people think that chart patterns itself is a valid setup. Yes, it is a part of a setup, but I personally see or think that a setup always consists of multiple dimensions. One is fundamental, one is the story behind the stock, and then the technical pattern. So, and if you really want to hit some home runs in stocks and want to participate of a larger trend, then you must see that there is not only a technical chart pattern, but also a great fundamental background and a great story behind the stock. Especially the story is interesting important because institutions which drive the market are always interested in long-term engagements in stocks. And they need a story, and they need fundamentals so that they can start to buy large positions and hold the positions over years. And that's why you always want to look from different angles on the stock. And really, the chart pattern, the technical chart pattern, is only one part of a setup. You know, I personally would never buy a stock only because there is a chart pattern, like a VCP or something. There must be more, and then I'm willing to buy a stock. Okay, I hope this video helped you, and you find more in my YouTube channel, and of course on Twitter, and in my free newsletter that I will send out every Sunday.